be cautious with the idea of just jumping in and chasing. And I know I said this yesterday, and I understand that we're 200 pips higher, but we could have very easily been 200 pips lower. These gaps do get filled eventually, especially with the idea that the new potential prime minister of Japan is going to be loose with a monetary policy. It would only take one statement from her to send this market crashing 300 pips to the downside almost immediately. So you have to be cautious. Again, the Canadian dollar was stronger than the US dollar for several months there earlier this year, but quite frankly, things have changed. And now it's starting to look like the Canadian economy is really struggling. As soon as the US government opens, we'll get hit with a deluge of backdated data that could cause a lot of noise and volatility in the markets overall as people readjust their expectation. I want to get long of this pair, but I don't want to chase it like this. Experience has taught me this is a really good way to lose a lot of money. And again, only to see the market head in your direction eventually anyways, after your account's been blown. So save yourself the heartache and just simply take your time. Look for some type of deep correction that you can take advantage of. This is Coach Chris from Hola Prime with your Technical Roundup. Tuesday has been a very noisy day in a lot of different markets. And of course, that won't be any different in silver. Silver is now breaking below the $48 level, which in and of itself isn't a huge situation, but it does suggest that perhaps silver is getting a little overbought. When you zoom down to the 1 hour chart, you can see clearly that there are some support levels underneath, especially near $47. And I think ultimately we probably see buyers come back in, especially if we can get back above that $48 level. This is a market that's overbought, and it is worth noting that several times over the last 40 years or so, we've tried to rally towards the $50 level. We failed. This will now be the third time if we fail. But anytime we get anywhere near this area, there is typically some type of sell-off. I'm not calling for that, but I am putting that into the back of your head so that you remember we are at dangerous levels. The gold market continues to rally, although it did give back some of the gains. And in the futures market, we actually broke above the $4,000 level. That's a large, round, psychologically significant figure that everybody is going to be excited about. But at the end of the day, I don't think it really matters because, quite frankly, this is a market that will continue to move on a handful of reasons, not the least of which would be the fact that central banks around the world are buying gold hand over fist. And furthermore, there are a lot of concerns about the global economy, geopolitics, etc. So with that being the case, I think you have to look at this as a market that you're looking to buy dips on and could even see maybe someday a return back to the $3,800 level, which was basically the measured move of the ascending triangle previously. I would expect to see market memory in that area. Truthfully, though, this is such a bullish market, I'd be surprised if we break down below $3,940 easily. So short-term dips continue to attract attention. The euro has fallen, and I think this is one that's worth watching because the euro is trying to break down below a trend line that is recent, as well as one that's a little longer term. So we haven't really done it yet, but we are right up on it. And I think you've got a situation where if we break down from here, the euro could find itself testing the 1.16 level. The 1.16 level, of course, is a large, round, psychologically significant figure that has offered support. If we break that level, I think at that point in time, you'll see the euro break down pretty significantly and possibly even see the US dollar rally against multiple currencies, not just this one. This would be a bit of a harbinger, if you would, of actual action, I think, around the Forex world. Notice we've been very choppy. I would also point out that the top was during the FOMC press conference. So clearly, while we had heard stories of the US dollar falling apart, no longer being the world reserve currency and all of that. The reality is it's done nothing but strengthen since then for the most part, so something to pay attention to. The British pound has fallen during the day, but has turned around to show signs of life again. This is a pattern that we've been in for several days. The Asians and the Europeans seem to sell it. The Americans try to push it back up. So we'll see. This is a pretty neutral market. I think it probably stays that way for a while. Anything below 1.32, though, would open up potential problems for the pound, as it's been a bit of a floor. But we're light years from that right now. We're basically in the middle of a larger range. The US dollar has rallied against the Swiss franc again during the trading session here on Tuesday, but the 0.80 level continues to be difficult to overcome. If we can break above there, and by extension the 50-day EMA, then it's likely that the US dollar goes looking to the 0.81 level. Anything above there could start to enter the realm of a potential trend change. So watch this pair. This could be a sleeper out there for those of you looking to trade major pairs, because I know a lot of you ignore the Swiss franc at your own peril. A breakdown below the 0.78 level would be disastrous for the dollar. We probably see the US dollar sell off against most things, unless it becomes a major risk off environment. Then you might see the US dollar sell off against the franc, but pick up strength against multiple other currencies. So do keep that in the back of your mind as a little bit of a outlier. The US dollar continues to go straight up in the air against the Japanese yen, as we are now above the 151 yen level. I don't like buying at this high level, but clearly there's only one direction to trade. The question is, will we fill this gap? It was not filled. This is what is known as a bad tick. So the question is, will we pull back towards 148 yen? If you were to go long in this market right now, you'd have to have a stop right around that area. So you would have to have almost a 400 pip stop to even start to talk about buying the dollar against the yen safely. Quite frankly, if the dollar continues to do this, you're going to make more traction in other currency pairs. Yes, I understand this was partially about an election, and it does make it a little bit unique for Japan. Clearly, you can't get short of this market. Maybe, just maybe, you get an opportunity on a short-term pullback that bounces. But right now, this is a very dangerous place to live. The US dollar has rallied against the Canadian dollar, but gave back gains as we continue to consolidate. We recently have broken out of a consolidation area that had the 1.39 level as the top. And now, I think what we've got going on here is consolidation between 1.39 and 1.40. A move above the 1.40 level, which I do expect to happen eventually, opens up a big reversal, probably to the 1.42 level initially, maybe even as high as 1.45. Yes, the Canadian dollar was stronger than the US dollar for several months there earlier this year, but quite frankly, things have changed, and now it's starting to look like the Canadian economy is really struggling. Keep in mind that we do get the Canadian jobs numbers on Friday, and possibly the American job number if the government reopens. So this will be a pair that might be interesting to watch. If the Canadians post a job loss again for the month of September, that's bad. And I think this pair goes much higher. Between now and Friday, we could see a lot of choppiness and sideways action. So I don't know that we get the breakout or the breakdown before then. But it's worth noting that longer-term traders will be watching the 50-day EMA start to creep towards the 200-day EMA, possibly kicking off the so-called golden cross. That is typically a buy and hold signal. The Australian dollar has fallen again during the trading session on Tuesday, as we continue to just dance around in the same neighborhood we've been in for what seems like most of my life. I understand that's an exaggeration, but at this point, the 0.6550 level continues to be a little bit of a magnet for price. Going down to the lower time frames, a move below 0.6575 probably opens up a 25 pip drop. A rally from here could go to the 0.6620 level. But that's basically the way the Aussie has been behaving as of late. It just is killing time. Notice that after the initial shot higher in April, while the rest of the Forex market was rallying quite significantly against the US dollar, the Aussie was just chopping back and forth in a bit of a channel. We even started falling at one point and then turned around and peaked, like the euro, like the British pound, and like so many others, during the FOMC press conference. If you look at this from a simple line chart perspective, you have to ask questions. If we break down to the 0.65 level, did we just make a lower high and a lower low? This is what I'm watching in this pair. I do know that the Aussie is underperforming overall, and if the US dollar starts to strengthen again, that almost certainly means that the Australian dollar will end up being in serious trouble. This could be where you want to live on the short side. We'll just have to wait and see how that plays out. The euro initially did rally against the British pound during trading on Tuesday, but we've seen the market turn right back around and show signs of exhaustion. Because of this, I think you have a situation where traders are likely to look at this through the prism of a market that is just trying to sort out exactly what it is the European economies are doing. It is worth noting that the euro was a big outperformer, but take a look at the 0.8750 level. That is an area that had been pretty significant as far as resistance is concerned previously. And then we just formed a double top. I'd also point out divergence. So I'm becoming increasingly bearish of this pair. I think your real clue might actually be in the euro against the US dollar. If it breaks that 1.16 level, pay attention to the way the pound's behaving. You may find that it might be bearish too, but it won't be as bearish. And then that's exactly what you would see here. Breakdown below 0.86 has me looking at the 200-day EMA, and then eventually the 0.84 level. This is a pair that tends to grind more than anything else, so it's pretty rare that you get impulsive moves like we had seen back during the beginning of April, but it does happen, and it happens in both directions, obviously. So I'm looking at this as a potential top at 0.8750. That being said, it is worth noting that we gave up all of the gains during the session on Tuesday, and we are now just sitting here on the 50-day EMA, and I think that could be something worth watching as well. The euro also struggled against the Swiss franc. It tried to rally, it gave it back. Now, that being said, this is a pair that had a very tight range for the day, so I don't read too much to the failure to hold. At least not at the moment, because quite frankly, this is a market that I think is trying to sort out whether or not we are going to stay in some type of range, which really, if you look back to the middle of April, it's been basically between 0.92 and 0.9450. If we break down, then you've got to move to the 0.92 level. On the other hand, if we break to the upside, which I don't see us doing that very easily, we could go to the 0.95 level. Ultimately, this is a market that I think will continue to be very choppy. So short-term inclined traders, maybe on the 15-minute chart, might find plenty of opportunities here, but I don't know that this is a market that I think I'd be putting a lot of money into, unless, of course, I can sit here and babysit the charts. The euro continues to climb wildly against the Japanese yen. This is the same story as the US dollar against the yen. We're just taking off to the upside. There's this mania. It's difficult to hang on to, but you do need to watch. I suppose if you had to pick a direction, it's to the upside, clearly. But again, this comes down to whether or not you're comfortable with a 400 pip stop loss. Chasing this is a great way to lose money only to see it go in your favor. When does it stop rallying like this? I don't know. But I do know that the interest rate differential favors the euro. So, I mean, it all lines up quite nicely. But trying to get involved after a move like this is going to be very difficult and, quite frankly, reckless. You can see that the last 5 hours as I record this has been straight up in the air, so that's basically the US doing this. Any pullback at this point in time, I'd be interested somewhere closer to 175, and I'd be very interested near 173.5, but I don't think we're getting that anytime soon. The British pound continues to go back and forth against the Swiss franc, and this was a very choppy session here during the session on Tuesday. And keep in mind, this pair is going to be one that is a little bit noisy overall because it is a pairing of currencies that are on the opposite ends of the spectrum. People will buy the British pound when they want to speculate a bit, but the Swiss franc is considered to be a safety currency. In other words, this is a bit of a risk barometer. The Swiss franc has been strong for a while, and that makes a certain amount of sense because despite the fact that U.S. stocks typically won't fall, the reality is that traders aren't real sure about the global economy and all of the nonsense that we see in the headlines. We see countries slowing down. We see countries like the U.S. picking back up. We see a lot of questions asked about central banks, monetary policy, and everything else. So I think you have to be very cautious. The British pound Swiss franc pair is one of my favorites, but you should be wary of the fact of putting a lot of money into it just simply because it is so volatile. I think at this point there is an area between 1.0650 and 1.06 that continues to be important and continues to be followed quite closely. But I also recognize that you need to really look at this through the prism of whether or not you can hold on to it longer term. I think you've got a situation where traders are looking at this and questioning whether or not this is the bottom. You can make an argument for a descending triangle. I get that totally, but you can also make an argument for a triple bottom. If we can break above the 50-day EMA, which is currently at the 1.0772 level, then I become much more comfortable with the idea of buying this currency pair for a longer term move. In fact, if that happens, I'd be aiming for at least the recent swing high at the 1.0975 level, and anything above there could lead to a massive long-term move to the 1.12 level. If we break down below the 1.06 level, we probably go to parity. That's not as crazy as it sounds. It's been a while since we've seen currencies go to parity against the Swiss franc, but it has happened. So be aware of the fact that we have to be very cautious here. I would make sure to keep my position size reasonable because you could find yourself in serious trouble. The British pound against the Japanese yen is going to be the same story as every other yen-related pair, except in this example, you need a stop loss of about 600 pips. So in other words, this is even less likely to be a trade that I would be taking anytime soon. Be cautious with the idea of just jumping in and chasing. And I know I said this yesterday, and I understand that we're 200 pips higher, but we could have very easily been 200 pips lower. These gaps do get filled eventually, especially with the idea that the new potential prime minister of Japan is going to be loose with a monetary policy. It would only take one statement from her to send this market crashing 300 pips to the downside almost immediately. So you have to be cautious. Again, I want to get long of this pair, but I don't want to chase it like this. Experience has taught me this is a really good way to lose a lot of money. And again, only to see the market head in your direction eventually anyways, after your account's been blown. So save yourself the heartache and just simply take your time. Look for some type of deep correction that you can take advantage of. This is a market that will continue to track higher, probably, but we don't know that for a fact. We never know. The new Japanese president, who is expected to be prime minister, could very well say, well, no, I don't want to just print yen. this thing will collapse really quickly in that environment. Or it might just be profit taking. You could see a 200 pip pullback pretty quickly. So keep in mind how far we've come and what the risk is if you start buying. The Canadian dollar actually rallied against the Swiss franc during the session, which is nice for the Canadian dollar. But it's also worth noting that the 0.57 level is an area that's been pretty supported over the last couple of weeks. So this is just more of the same, I think. You've got a situation where the market will remain well supported here, but I do think eventually you probably have a breakdown. And this is more to do with the Canadian dollar and less to do with the Swiss franc. Again, there are a lot of concerns out there, and it does make sense that the Swiss franc picks up a little bit of momentum. But quite frankly, the Canadian dollar is in such a bad spot at the moment with the Canadian economy that I just don't see how you come in buying the Canadian dollar hand over fist. There is the potential that there's a little bit of short covering here heading into the employment number in just a couple of days. I get that. But really, at this point, this just looks like consolidation to me. The 50-day EMA is currently right around the 0.5775 level and dropping. So that might be an area that we need to pay close attention to. We'll just have to wait and see. But I also like the idea of perhaps just fading rallies, especially as we get close to the 50-day EMA. The 50-day EMA obviously will attract a lot of attention. It's basically acted as a downtrend line in this. So I think that remains the case. Really, at this point in time, I do think it would be a brilliant long if we get some type of trend change. You could be talking a move all the way up to 0.64, but nothing's changed to make me think that. The Swiss National Bank probably would have to intervene at this point to make that even remotely close to being a possibility. The Canadian dollar does look strong against the Japanese yen, and I mentioned yesterday that I suppose if you're going to buy anywhere, I think this might be where you do it just because it's a laggard. I don't like the stop loss. Again, it's the same story. In this case, it's about 300 pips. Okay, that's better than 600. But it is still a major problem if you are trying to do anything along the lines of position sizing. Ultimately, I think you have to look at this as a market that continues to follow what's going on in the yen and not so much the Canadian dollar. And therefore, it will look like the other ones. It just won't be as explosively positive, I think, as far as like actual real estate and pips. But it's the same story. You need a pullback. And really, if you get the pullback in a bounce, you're probably buying the pound against the yen anyways, or the dollar, not the Canadian dollar. The euro against the Norwegian kroner continues to be very noisy as we continue to hang around 11.61. This is an area that's offered a little bit of support, and it's worth knowing here that the 50-day EMA has offered short-term resistance right along with the 200-day EMA and the 11.75 level. If we break down from here, the 11.4 level also offers potential support, but we'll just have to wait and see how that plays out. Right now, I think we're basically in the middle of a trading range, and the market probably needs to be looked at through that prism. If we could break above the 11.8 level, then we could really start to take off towards 12, but right now, I don't see that being in the cards. I also see a situation where the Norwegian kroner is probably somewhat limited in its gains, mainly due to oil markets as it's so heavily levered to that commodity. The euro against the Swedish krona, it sees very similar action as you would expect. The 50-day EMA, which is just under the 11.04 level, is offering a little bit of resistance. I think this continues to be a fade the rally market, so if we rally and show signs of exhaustion, I'm willing to start shorting. If we can break down below the 11.88, 10.88 level, then the euro really starts to sell off. I think this is probably more of a euro problem than it is a Swedish krona strength situation. This is not a pair that I trade often, but clearly we're in a downtrend. The New Zealand dollar is doing the same thing against the yen as everybody else is. And again, you're looking at about a 300 pip stop loss. If we do take off from here, the next major supply area is going to be found at the 88.85 level. So your risk to reward is skewed here. I'm not saying we can't get there. Clearly we can. But you're going to be risking basically 4 to get 1. So again, unfortunately, this is a situation where it gapped up and just took off, and there isn't anything you can do about that. This happens sometimes. What you can do afterwards, though, is wait for those pullbacks in order to find a bit of value, because they will present themselves sooner or later. This is not the type of trade that you want to chase. The New Zealand dollar against the Swiss franc, of course, remains very choppy and sideways between the 0.46 level and the 0.4650 level in a very negative trend. I continue to fade rallies here. I don't like the New Zealand dollar against anything, let alone the Swiss franc. So really at this point in time, I think New Zealand continues to be a theater of weakness, and we have to play it as such. Short-term rallies, I would be selling. I'd keep an eye on this 50-day EMA at 47 yen, or 0.47. This is a market that is very sensitive to risk appetite, the New Zealand dollar being a risk-on currency, the Swiss franc, of course, being safety. The New Zealand dollar has rolled over against the US dollar during trading here on Tuesday, and I think we continue lower. I don't like the New Zealand dollar, like I alluded to here just a minute ago. And now I'll be watching to see if we can break down below the 0.5750 level. In that environment, we really could start to unravel. I think you've got a situation where we could drop another 100 pips pretty quickly. In the meantime, if we do rally towards that 0.5850 level again, I'm willing to start selling at the first signs of trouble. I don't like the New Zealand dollar. I do like the US dollar. The US dollar has rallied a bit against the Mexican peso during the trading session as we continue to see a little bit of sideways action. This is a market that continues to be noisy as we trade between 18.2 on the bottom and 18.5 on the top. The 50-day EMA is just above the 18.5 level, so I think that will continue to provide a little bit of a ceiling. Crude oil eventually did rally during the trading session here on Tuesday, but not for trying to break down. The $62 level in U.S. oil continues to be an area that we have to watch very closely. And if we can break above there, then we will probably test the 50-day EMA. After that, then we could be looking at $65. Oversupply and a lack of global demand are serious concerns, but OPEC announced a smaller than expected addition of drilling and supplying to the market. So that might be part of what's going on here. I don't think it's enough to change the overall perspective of traders. The Nasdaq 100 did break above the 25,000 level, only to fall significantly during the day, in what I suspect probably had a whole lot to do with profit taking. Notice the 24,800 level is starting to have traders come in here into power hour, so we'll see how this plays out. But it does look to me like a market that wants to consolidate with more of an upward tilt. If we break down below 24,800, I'm willing to buy it at lower levels, specifically 24,400 if I get that opportunity. The S&P 500 did the same thing. We initially tried to rally, we fell, and now we find ourselves testing the 6,700 level. The 6,700 level is an area that should offer support as it was resistance previously, but we'll just have to wait and see how this plays out. It is a longer-term uptrend. I don't think that's changed. The question is, can we get a nice enough bounce to really take off to the upside? I think we've just been in this nice 45-degree angle rally. Maybe some people out there are just not willing to hang on to this position much longer. It's ran its course. They want to see a correction to find value going forward. The Dow Jones 30, or the Dow Jones Industrial Average, initially rallied during the trading session here on Tuesday, but it is running into a bit of resistance. However, It's also worth noting that late in the day, we are fighting back. You can see we had a couple of really rough hours, some sideways action, and now we're bouncing from the 200-hour moving average. Can we recover from here? Yes, I think we can. I don't know if we will, but we certainly can. The 46,000 level, I think, ends up being a major support level in the short term. Assuming we even get there, I think 46,250 probably comes into the picture as a potential value play as well. The market breaking above the recent high probably sends the Dow Jones 30 to the 48,000 level before it's all said and done. All things being equal, I think we're still in a bit of a pro-US market, and I think it's turning even more rapidly in that direction. There are some outliers, such as crypto, although crypto got crushed during the trading session. Overall, it's been rallying right along with the US dollar and the US stock markets. Other stock markets are somewhat positive, but maybe a little less so than America. And of course, other currencies are struggling against the greenback, although they're not being sold off viciously, with the exception of the yen, which of course is in its own world at the moment. Ultimately, this is a market that's probably going to see some volatility, especially as the US government is closed and we are not getting US economic data. So keep that in mind. But as soon as the US government opens, we'll get hit with a deluge of backdated data that could cause a lot of noise and volatility in the markets overall as people readjust their expectations.
Hola Prime, trade with transparency.